This is the MTPredictor weekly market update for October 6th. Well, we are in the last quarter of the year here. Always an interesting time when we get into October as far as the markets go. Let's take a look. This is the S&P current contract, the futures contract, and the daily chart. A lot of people will use the daily chart to trade off of, and I just want to show you how we look for potential setup. Is here's with the daily chart here, but we want to go to the weekly chart, and we're going to use our decision point tool to map out some major support and resistance on the on the weekly chart, and then look for our trade on the daily chart here. So here was the last swing high. If I right click and I take our decision point tool, it tells us this was the next level of resistance here. Let me just pull some of this back, open this up a little bit. So this is an area that we had on the chart ahead of time in anticipation that we might see if the market does rally here, we want to pay attention. All right, here's the last swing into this high. Let's take a decision point off of this level. This gives us our next major support. So again, price hasn't come to this level yet. It's on the chart ahead of time. So if we go now to the chart that you want to trade on, let's say, which would be the daily chart here, we've mapped out major support and resistance. Now you can see on the daily chart here, again, if I remove kind of the right hand side of the chart, you see this level is on the chart when price was down here around 1640 to 45, 46 level. All right, you had an area of resistance up here around 1715. And so what we're saying is if the market does rally into this level, we're at a major weekly decision point resistance level. And that also means that we could start potentially looking for sell signals, that the trend which was up may turn and become a trend in the downward direction, or at least correct. Now you see this little high volume spike. It's all the way on the right hand side here. I don't have the ability to add some space here. But it was on this gray candle here. You see this red high volume spike. This gives us a heads up when we're in a major resistance area like that, that there's unusual volume activity happening on this particular day. What it's potentially telling us is that sellers may be stepping in here, and if it's selling, if this high volume is correct, that this volume may be selling volume and not buying volume. So even though the market's moving higher here, you have this nice big up candle that particular day, this red volume spike tells us that there's something unusual here that we want to pay attention to. What we want to look for is we want to see if this what we call a neutral candle here is followed by a red, what we call seller's candle. This is a proprietary candle that tells us that the sellers are now overcoming the buyers in this resistance area. So we only pay attention to the color of these candles when we're in a major support or resistance area, or when we're looking to set a trade up. Back here we had a buy set up here that the software provided, followed by a blue buyers candle telling us that buyers were now overcoming the sellers in the support area that the software found. Here we found this area. It's a major resistance area from the weekly chart. The daily has come into that level, got a high volume spike followed by a red sellers candle, confirming that in fact this is not buying volume, that this is actually selling volume. And if it's selling volume, it's probably professionals stepping in and selling. And if it's professionals, then the move is typically not a small move, it's usually a large move. So what we can do then is we have here's the last swing into this high here. We can take our decision point tool, give ourselves a target here. Again, around this 1605 level on the chart ahead of time, and then we can create our risk reward scenario here if we want to enter below that red seller's candle with a stop above, and this would be our target down here. And the software says, okay, let's see, let me get rid of this one. Oop. Got rid of the wrong one. Let me just redo this. Okay. The other one I think was our weekly support there, but let me just use the daily support here for the trade setup. So here we've created our low risk, high reward trade. And the software sizes the position. So in this particular account, can trade 4 contracts. with the stop above the swing high there. The target, it tells us, is 7.6 times our initial risk. So in this case, if you're risking $2,800, you can take out 21,000, a little over 21,000 at the target there, or 7.5 times your initial risk. So low risk, high reward. If this took you in and stopped you out, you're going to lose a small, what we call 1R loss. If you win, you're going to win big. So this was a setup that we look for. These will set up intraday, on a 3-minute chart, working with the 15-minute as resistance. They'll set up on the daily chart using the weekly as your major support and resistance, as we did here. And again, the opportunity for a low risk, high reward trade, picking a top, not any more risk than trading the meat in between, so to speak. And so the target is here. We've already achieved the 100% initial risk line a while ago, as soon as price sold off down to this 100% initial risk line. On the bigger time frames like this, you can move the stop from the initial position to the entry for a risk-free trade. All right, so at this point, this trade as of Friday's close there, already about twice your initial risk there. All right, I'm going to clear this off, and then let's just go to the monthly chart and see if I can. So here's the last major swing high here from the monthly chart. If I take my decision point tool, okay, so now I know we are in a major monthly resistance area. If I go down to now it's a large area, obviously. It goes above 1800, around 1840 level. All right, so it's a larger area, but let's then go down to the weekly chart. Okay, now we don't have any high volume spikes here. All right, we had this trade prior. It didn't reach the target, but we were able to get the stop to break even there. But now we're still in this resistance level. You've got a red seller's candle there, so let's say, well, let's just take a decision point off of this level here, and let's just check the risk reward on this and see what it looks like in terms of the weekly chart. Not enough. You see this risk reward is 1.4. That means the reward is only 1.4 times our initial risk. It's too small for us to consider on that. If you were going to take this trade, you would have to use, if I right click here, you'll see that we had this 5-wave pattern up, and you see we're still in the minimum wave 5 resistance. Typically, if it corrects from here, you get a correction back to this wave 4 DP. So maybe if you want, if you did short this, you can be using your target as the wave 4 DP. Now the risk reward would be 3 times your initial risk. Again, you'd have to be careful. This area will be a support area. If you do achieve the 100% initial risk line, again, especially if you get into this DP level, you have to expect the market is going to potentially rally from there. All right, but this is how we do the analysis using the next largest time frame, usually about 3 to 5 times greater than the one you trade off of, to map out your major support and resistance levels, and then check for the patterns, if potential market topping pattern like we had here, and look for your high volume spikes, your red sellers candles, and see if we can get in an area where the step in where the professionals are stepping in, as we did in this case in the daily chart. So just kind of doing a little more analysis as to how you actually pinpoint the trade setups with this. All right, so if we just kind of go back here to the weekly chart, again, we know we're in this major resistance level from the monthly chart. It's a big level. You see the typical wave 5 is up here, still inside the monthly decision point level here. We'll see how far this correction goes, and then if they continue higher, here's your typical wave 5 up around this, well, it's just about 1800. Nice round number there. Let me just flip this over to the Dow. Again, here's the weekly chart on the Dow. Hasn't quite achieved the minimum wave 5, so the S&P is kind of holding it up from hitting that target, because the S&P hit its targets first, in its resistance levels first. I'm going to go down to the daily chart here, and you'll see again this swing also happened to be the weekly decision point resistance. Again, in that area you had the high volume spike that came in here, followed by the red seller's candle telling us, in fact, this looks like it was professional selling coming in. Well, let's take our decision point. Here's the last swing into that high. We'll take our decision point off of there. Give yourself a target. Oops. Analyze this in terms of risk and reward. So here's a short of 5 contracts, excuse me, risking $2,500. A target here, almost 10 times your initial risk. Take out about a little over $25,000 at the target there. Again, this is a larger account, used to trade bigger time frames here, just so you can see the position sizing and how that works. So the risk is small and controlled in comparison to the reward side of the equation there. So if you lose small. You win big. So this one now on the Dow. Dow's been the weaker market, so as of Friday you already have about 5 times your initial risk in there. And again, you can have your stop certainly to break even now. And we'll see. We don't have any strength on the STF here to the downside. So at some point, if there is strength to the downside, we can be trailing with a trailing stop and see how far it goes. All right, let's look at some other stuff here. Let's take a look at gold. And this is, okay, so this was our short trade. It was just a standard trade setup as the STF was red, telling us the larger degree trend was down here. We've been watching this one for weeks now. Again, if you're still in this, stop should be at break even here. Now, the interesting thing from a standard trade perspective here is you have a buy signal. You see the ABC correction that has come in here. Let me just take a decision point off this B swing, which was the last swing into the high. This will be another area around 1250 of support in gold. But this little ABC that's unfolded here, again, if I just right click and I choose Elliott Wave Intermediate, you can see the pattern here right into the minimum wave C support, followed by this blue buyer's candle. Also had a high volume spike, came in here on the neutral candle. All right, so potentially professionals could be stepping in there. Let me just put the analysis on here. Okay, so if you are short this, obviously, like I said, you can have your stop to break even there. You can maybe move it to the 100% initial risk line here, which would be above this swing high. You could have taken profit here based on the fact that this triggered to the long side. And if you did that, okay, about 4 times your initial risk in there, nothing wrong with that. So let's say on a $2,100 risk, taking out $870 or $8,700, 4 times your initial risk, nothing wrong with that. Again, if you're going to hold, you're going to have some support here. That's you can use that as another target. The ultimate target for the trade, though, is still down in this level. Again, we expect there's going to be a lot of volatility in this. Let's see let's just look at, I'm going to look at silver on the weekly chart here, because we've been following this one, and some are short from here, which was our wave 4. So we had a pattern here, the big wave 3 down on the meltdown there, the retrace into wave 4. Again, the high volume spike that came in here, followed by the red seller's candle. Let's project wave 5 down here using the tools in the software. Go down wave 5, start at the top of wave 1. And there's our projections there. Again, this to the initial target there, just fits our criteria for twice the initial risk. Hasn't quite achieved 100% initial risk line. If it does, then you move the stop down there for a risk-free trade and see if this thing will finish out. Once we go wave 5 down here, then we're going to see if we potentially get a bottom. Yeah, it's possible the bottom is already in. All right, but we were anticipating as this retraced into wave 4, again we had our trend line support that was broken here. There was actually this descending triangle, this distribution that was happening with Venezuela repatriating their gold in this area, and then later Germany, and we got all this distribution happening. The break of that level, again, the retest of that level, the rolling over into wave 5 potentially, and then we'll see, you've got a few wave 5 target levels here, and then we'll see if the bottom is in, and maybe potentially look to be buyers in there. I want to look at oil, but I'm not able to pull the oil chart up. Again, we saw that rally into that 110 level that had that kind of that war premium in it. That balloon kind of got popped a bit. We've seen a pullback from our major resistance level there in oil, and I'll try to get that chart working for next week. And then let's take a look at let's see. Let's look at the dollar index here. Again, that was their major low in the dollar that we anticipated to get the rally from. We've achieved the target level there. We got a correction in it. We're just kind of bouncing around. It has come off that level. Hasn't, well, here's the last decision point, support. So we just got in that level. You see some buyers were stepping in last week in this support level, and so we may get some rally here in the dollar at this level. Let's just look at the next resistance level here. There's no really good clear pattern in here. You can see this is just kind of, so we'll use these decision points to kind of give us an area of the next. Here's the last swing into this low, and so there's a decision point on the weekly around that 85.60 level. So we had buyers overcoming sellers last week in a support area, and then let's compare that to the euro here. Let's use the euro US dollar, and you can see as the dollar was finding support, euro was finding some resistance here. We had some sellers overcoming buyers last week. By the end of the day here, now here's where the TS4 was. Let's just take another level off of that, and here's the last swing into this high here. We'll take a decision point on it. It gives us, maps out our levels there. And again, this was all started as we were looking at silver with the 5-wave bottom there. The euro made that 5-wave bottom there. Again, here's the last swing into that low, the wave 4 decision point. We came right into that level. That's where we anticipate that the market will find resistance. We anticipate it will correct back to that level from wave 5, from that bottom. And we got a correction there. Now the thing kind of going sideways into some resistance, dollar and support. And so we may see, if we see some selling coming in and then buying in the dollar, and weakness in the euro now. So let me just look at the daily chart here. Okay, I'm just looking to see if we had any automatic trade setup that might have come in there. Don't see it there. Just a couple last things here. This is Apple. I haven't looked at it in a while because it's really still struggling to get above 500. But there was the wave 5 pattern. Again, we anticipate it to correct back to the wave 4 DP. Same pattern. All right. It's struggling in this area. Again, we call it a decision point because Apple needs to make a decision here. If it can hold above 500, we'll say Apple's going to be bullish. Below 500, bearish right now. And the danger, like we talked about before, is if this level gives way, then we can retrace this whole 5-wave pattern down. Here's wave 1. We go back to the bottom of wave 1 here, take our decision point, and at some point we may see this level if Apple can't, get above and base above that $500 level here. We'll take a look at stocks more in the coming weeks. I might be adding some more stuff there, and then we're going to get into a little bit more. If we start seeing the bottoms in gold and silver, we get that wave 5 down. This is just kind of a preview. This is courtesy of Cycle Charts. I subscribe to that, but you can see this is it's pretty self-explanatory, the total currency supply. This is base money, the blue line, plus your revolving credit. And you can see how this is just exponentially moving higher here. As the Fed is creating basically $1 trillion of more money into the system each year now. And if you go back, and what I want to do is we'll compare this to gold. You can see that the money supply was increasing after the war, or into the war, and then when Nixon took us off the gold standard there in '71 in August, the exponential move here. And obviously what happened in 1980 is we saw gold at all-time highs, at least during our monetary history, that $800 level, and then of course this that move we saw in 1980 compared to what we have today is just absolutely nothing. And so, as gold has done throughout our history, our monetary history, is it accounts for all this creation of money at some point. And so, let's see, where do I want to look? Go just quickly to where's just the gold spot price here. You can see this goes back, to 1800s here. But here is the spike in 1980. Gold accounting for all that money supply there. It's doing an accounting again. It's pulling back here, but the level of money that's being created, again, $1 trillion a year. Gold eventually is going to continue to do an accounting for all that money, and you figure the money printing that's going on around the world, it's not just here. It's going to make this very interesting. So at some point, I think forces that are going to take over that will kind of defy, I think, chart logic, if you will. All that is probably coming down the road as more and more countries around the world are getting out of U.S. dollars, and maybe the beginning of the end. So, in terms of the dollar as the world reserve currency, and just something that we'll keep an eye on here. All right. So have a good rest of your trading week, and we'll do this all again next week.